South Africans are already feeling the pinch of higher food prices. According to the Institute of Race Relations, South Africans spend over 25% of their household income on food. With the Reserve Bank widely expected to hike rates this week, this figure will rise.
I can't even afford to buy meals and stuff like that. Even food that we eat every day is too bad. You can't even afford anything now.
The prices of meat, especially at selected stores, is quite crazy. So you forced to go on a diet just to make ends meet.
We expect the MPC to raise interest rates by about 50 basis points, so moving away from the usual convention of about 25 basis points. I think it's just to anchor inflation expectations and just provide some sort of financial stability.
Ultimately, the core mandate of the Reserve Bank is to control the prices of goods to safeguard the poor, and this is done by hiking rates. But with incomes remaining the same, poor South Africans, more especially those that use credit to get by, will have less in their pockets by the end of the month.
It looks very much as if inflation will rise not just to just over 6%, but could rise quite a bit further to 7 or 8%. Under such circumstances, the normal thing for a central bank to do would be to raise interest rates by 2%.
The falling rand, a weak global economy and persistent drought conditions here on home soil are all adding to the higher inflation outlook. The Reserve Bank finds itself in a tough position. While its core mandate is to control inflation, it also has to consider growth and unemployment.
The IMF cut its growth forecast for South Africa down to 0.7% this year.
The problem is that when you see your economic growth declining from 2 down to 1 and now down to close to 0%, do you want to slow the economy still further, which is the risk of what would happen if interest rates were to rise still more. And yet, on the other hand, if you don't do that, then you're likely to distort economic activity.
South Africans have been urged to clear debt and find ways to save. But with rising costs, food and electricity in particular, it's a hard call. Most economists are predicting the economy will go into recession this year. The only saving grace at this point is the export market. With the rand at over 16 to the dollar, it's an opportune time to lift manufacturing and push the sale of commodities. Sumitra Nydoo, CCTV, Johannesburg.